Markets should interpret it positively because I think when we talk to our clients, many are viewing tariffs as punitive, potentially protectionist, and driving several economies into recession. This sounds like
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee discusses how tariffs may create a positive case scenario. In this video, we cover market shifts and economic insights. Let's watch to learn more.
Now let's bring in FundStrat's managing partner and head of research, Tom Lee, a CNBC contributor. It's good to have you. What do you make of this report? I mean, part of the uncertainty of all of this has been the, iron fist, maybe olive branch. Back to the iron fist, maybe an olive branch. What do you make of it?
Well, I think markets should interpret it positively because I think when we talk to our clients, many are viewing tariffs as punitive, potentially protectionist, and driving several economies into recession. This sounds like that we could actually have a positive case scenario with these tariffs, one that's either mutually agreed upon or if it's reciprocal, but maybe a good deal for businesses. And I think it would set the stage for a much bigger recovery rally than we expect.
Afterwards, right?
Yes,
I mean,
after.
The problem is the paralysis, if you will, between now and then. Like, what are we supposed to do over the next 10 days?
That's the dilemma, right? Because we still have 8 trading days till April 2nd. Most investors are getting just nauseous from the volatility, so they want to throw in the towel. But we also know that markets will bottom or have historically bottomed before the event actually happens. The best example is the Cuban Missile Crisis, 1962. That was a 12-day crisis. The stock market bottomed 7 days into that crisis, recovered 2/3 of the losses before the resolution. So I think that's a decent template for today.
What about the economy? I mean, listen to Nike, FedEx, put that on top of what we've already heard. Are you concerned about where the economy's going?
It's been pretty shocking how quickly sentiment deteriorated. I can understand for consumers because the president's very divisive, but for CEOs, that's been a shock. CEO confidence has fallen, and they've kind of been sitting on their hands. So we know there's an impulse of a growth shock underway. But if this is something that doesn't last months, then it's very temporary.
After 5 consecutive weeks of net outflows, Bitcoin ETF have experienced a remarkable turnaround with $744 million in inflows this week. On Monday alone, these funds saw a strong $274 million influx, marking the highest single-day figure in over a month. The renewed inflows signal a resurgence of institutional interest amid easing macroeconomic pressures as investors begin to regain confidence. Bitcoin remains below the $90,000 threshold, leaving room for potential market recovery. Following a brutal February in which Bitcoin ETF shed over $5.3 billion, recent inflows over 6 consecutive days suggest that institutional players are repositioning themselves in anticipation of a rebound. BlackRock's IBIT led the charge with a robust $150 million inflow on Friday, despite Grayscale's GBTC continuing to experience outflows. Crypto influencer Zia Ulhak speculated that these moves might indicate insider confidence in Bitcoin's future. While some analysts caution that a portion of the demand may come from arbitrage strategies rather than genuine long-term interest, overall sentiment remains cautiously optimistic. With Bitcoin trading around $84,148, the market's reaction to these ETF inflows could pave the way for increased stability and a potential upward move in the near future. This positive shift offers hope for lasting market stability.
Consumers remain skittish. CEOs are paralyzed in their own right because they can't really make any moves as they're not sure what's going to happen, and ultimately whether a growth scare spirals into something else, which Jeffrey Gundlach gave me his view yesterday right here on Closing Bell. Listen.
I do think the chance of recession is higher than most people believe. I actually think it's higher than 50% coming in the next few quarters.
50, 60%? I mean, if he's right, what does that mean for the stock market?
Well,
too expensive.
when the S&P had a 10% drawdown, that's already priced 40% chance of a recession. I'd say the markets aren't agreeing necessarily with his view because China, Europe, Canada, Mexico have been massively outperforming the U.S. since February 18th. Those economies should be tumbling into recession if we have punitive tariffs. So I think markets are actually more paralyzed than necessarily pessimistic. And
I'm sorry, finish your thought.
But because the market is the economy, I think to the extent that stocks rebound sharply after April 2, if they do, I think it really staves off future economic
Is the market the real economy?
I think it's these days, to me, I think it's a really good snapshot of actual sentiment and actually even CEO decisions. Because as you know, when stocks fall, companies lose confidence. And as stocks recover, CEOs gain confidence.
What about the idea that Gundlach also put forth that in his words, unintended consequences of all of the rhetoric from the president is making people think twice, especially overseas, about investing in the U.S., and the view that Europe is just a better value and offers even less risk than before. How do you play that?
We hear a lot of folks talking about that, but as you know, Europe tends to be single stock concentrated indices. So if you're buying Europe, you're basically buying industrials and financials. If you're buying Korea, you're buying Samsung. So I think if someone is looking for the best companies, they're still going to end up buying the U.S. One of the things that we have to keep in mind is this trade deal, if it's acceptable, could actually basically sort of blunt this whole issue of trade in the future, and it would actually make the U.S. more attractive again.
Bitcoin faces downside risk as it struggles to break out above key resistance levels, making a correction towards $65,000 a distinct possibility. This week, Bitcoin failed to sustain its rally past $87,000, trading mostly sideways above $83,000 amid easing global monetary pressures. While Bitcoin's performance remains uncertain, altcoins have shown strong resilience. Form surged by 87% following a successful rebranding in token swap, capturing market attention. PancakeSwap, trading under the symbol Cake, experienced notable gains as its decentralized exchange volumes soared and attracted new users. Meanwhile, Toncoin Toan posted impressive weekly gains, bolstered by positive sentiment surrounding key developments. Overall, the contrasting performance highlights a market divided between caution over Bitcoin's near-term outlook and optimism for select altcoins. With investor confidence wavering, the potential for a deeper correction looms, leaving traders closely monitoring support levels and market sentiment for signs of recovery or further decline. The outlook remains cautiously uncertain. At the first SEC Crypto Roundtable, financial expert Lee Reiners made a striking statement. Bitcoin is neither a security nor an investment contract. Speaking as a visiting fellow at the Duke Financial Economics Center, Reiners emphasized Bitcoin's unique decentralization. He explained that while Bitcoin operates across many parameters like governance, network, and data, it is still unclear when a digital asset becomes sufficiently decentralized, so that profits do not solely depend on others' efforts. The roundtable gathered influential voices, including John Reed Stark, Miles Jennings, and former SEC Commissioner Troy Paredes, all discussing how to adapt existing securities laws for digital assets. This gathering reflects a new regulatory approach under the current administration, aiming to reshape crypto oversight. The discussion provided fresh insights on market dynamics and regulation, sparking interest and debate among industry participants and investors alike. Their conversation illuminated potential pathways for future innovation and clearer industry standards. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.